Ever wondered how Wall Street manages trillions of dollars in risk? Or what that fear index you hear about on the news actually is? The answer to these questions and so much more lies with one institution, Cboe Global Markets. It's not just an exchange. It's the architectural backbone of modern finance. And today, we're taking a deep dive into how it works and why it matters to every single investor. Before 1973, trading options was like the Wild West. It was a chaotic, unregulated mess of informal deals. There were no standard contracts, prices were murky, and you could never be sure the other side would honor their trade. Then, the Chicago Board Options Exchange, or Cboe, was born. It introduced three revolutionary concepts: standardized contracts, a central trading floor, and a clearinghouse to guarantee every trade. Suddenly, options trading became transparent, trustworthy, and accessible. This single move unlocked a tidal wave of liquidity and innovation. The 80s and 90s saw Cboe change the game again. They introduced options on broad market indexes like the S&P 500. These contracts, known as SPX options, became essential tools for the world's largest pension funds, asset managers, and hedge funds to protect their portfolios and make strategic bets on the entire market. But Cboe's most famous creation was yet to come. In 1993, they unveiled the Cboe Volatility Index, or the VIX. You probably know it as the Fear Index. The VIX measures the market's expectation of volatility over the next 30 days. When it spikes, it signals rising fear and uncertainty among investors. When it's low, it suggests complacency. The VIX wasn't just a number. It became a tradable product itself, with VIX futures and options allowing investors to trade volatility directly. It has become a globally recognized barometer of market sentiment, referenced by everyone from university professors to the world's top macro traders. Fast forward to today, and the Cboe of the 70s has transformed. After acquiring Bats Global Markets in 2017, it rebranded as Cboe Global Markets, reflecting its massive global footprint. Cboe is no longer just an options exchange. It's a multi-asset behemoth, operating stock exchanges in the US and Europe, futures markets, foreign exchange platforms, and even venturing into regulated digital asset derivatives. It's a one-stop shop for trading almost anything, anywhere. So, how does trading actually work on Cboe? It uses a clever hybrid model. For high-frequency traders and algorithms, there's a fully electronic, lightning-fast system. But for complex, institutional-sized orders, they still have the iconic open outcry trading floor. This flexibility is key. Cboe's system is especially powerful for what are called complex orders, letting traders execute multi-part strategies like iron condors or calendar spreads as a single, seamless transaction. It's this sophisticated architecture that attracts the world's most advanced trading firms. Let's talk about the products that make Cboe so dominant. At the very top is the SPX option. It remains the undisputed king of index options worldwide. Why? It's cash-settled, meaning no physical shares change hands. It's European style, so it can only be exercised at expiration, eliminating the risk of early assignment. And the liquidity is incredibly deep, meaning you can trade massive sizes with minimal market impact. The world's biggest institutions use SPX options for everything from insuring their portfolios against a crash to making billion-dollar bets on market direction. And then there's the VIX ecosystem. It's not just the index, it's a whole family of products. VX futures allow traders to bet on where the VX will be in the future, while VIX options let them hedge against volatility spikes. This has created a whole industry around volatility trading, with complex strategies designed to profit from the ups and downs of market fear. The VIX is no longer just a market indicator. It's a fundamental part of the global financial system. Another area Cboe pioneered is short-term options, often called weeklies or even ODTEs. These options expire on Mondays, Wednesdays, and Fridays, allowing traders to make very precise short-term bets around specific events like an earnings report or a Federal Reserve announcement. These have exploded in popularity, offering a way to manage risk or speculate on a time scale of days or even hours. All of this is powered by bleeding-edge technology. Cboe's data centers are built for one thing: speed. We're talking about trades executed in microseconds. This low-latency infrastructure is critical for algorithmic traders and market makers who rely on speed to compete. But Cboe is also a data company. It creates hundreds of proprietary indexes and sells vast amounts of market data that fuels quantitative models and analytics platforms around the globe. Of course, with this much power comes great responsibility. Cboe is heavily regulated by agencies like the SEC and the CFTC in the US, as well as regulators in Europe and Asia. And critically, every single US options trade is guaranteed by the Options Clearing Corporation, or OCC. The OCC acts as the buyer to every seller and the seller to every buyer, eliminating counterparty risk. If one party defaults, the OCC steps in. This central clearing model is what prevents a crisis in one part of the market from bringing down the entire system. Cboe's ambition doesn't stop at the US border. Through acquisitions, it now runs one of the largest stock market networks in Europe and is expanding into derivatives there as well. It is also making strategic moves in Asia-Pacific and has dipped its toes into the world of digital assets, focusing on regulated crypto derivatives for institutional investors. Cboe's vision is to create a truly global, interconnected network for trading and risk management. So, why does Cboe matter to the global economy? It's a systemic risk barometer, with the VIX providing a real-time pulse of market anxiety. It's the ultimate insurance provider, where institutions go to hedge against catastrophic losses. Its markets are a vital source of price discovery, helping determine the fair value of everything from the S&P 500 to volatility itself. And it remains the world's undisputed leader in derivatives innovation. Looking ahead, Cboe is perfectly positioned for the future. The demand for sophisticated risk management tools is only growing. The rise of quantitative and systematic trading plays directly to Cboe's strengths in technology and data. And as new asset classes like digital currencies become mainstream, the need for regulated, exchange-traded derivatives will be paramount. Cboe's journey from a small Chicago trading floor to a global market titan is a testament to the power of innovation. It has fundamentally reshaped how the world thinks about, measures, and manages financial risk. Thanks so much for watching. If you found this deep dive into the world of Cboe interesting, don't forget to hit that like button, subscribe to the channel, and ring the bell so you never miss our next exploration of the engines that drive the global economy. See you in the next video.